There we go.
There it is.
Wow. Welcome, everyone, and thanks for joining us here on our first RethinkIR web series. My name is Darrell Heaps, and I'm the founder and CEO of Q4 Web Systems. I'm hosting today's session. We've got two great guests today. I'm hosting the session here in Toronto. And you can see from the background behind me, I'm in our open concept office here. So I've got my headset on, and hopefully it's not too noisy in terms of any of the background noise. And then also we have joining in the background is John Schuler, who works in our marketing department, who's handling the live feed, and he's also monitoring Twitter. So if you have any questions during the session, please just submit them to Twitter and use hashtag RethinkIR. And we'll be able to get those. We're planning this session today will be around probably 30 minutes or so, and that should leave some time for questions at the end. So any questions, just post those on Twitter, and we'll get those all together, and hopefully we'll be able to answer them all today. So today's session we've got two guests. The first is Rob Berick, and Rob is from Falls Communication. He runs their investor relations practice there. And Rob is actually the founder of the RethinkIR movement. Rob has been blogging and writing white papers, and so all around rethinking IR and talking about the storytelling component of IR for about probably the last year or so, or perhaps longer than that. We'll hear from Rob in terms of how long he's been doing this, but some very interesting thoughts and perspectives in terms of investor relations. And Rob's been in the market and providing investor relations services for around 20 years now with all sorts of different companies, and is one of the most prolific speakers that I know of in terms of talking about this aspect in terms of telling stories in IR. So on that note, Rob, why don't you give us a quick hello?
Hello, hello. Thank you for having me today.
Wonderful. It's absolutely our pleasure. And this is our first Google Hangout as well. So hopefully all of this is working on the back end, and you guys are being able to see. You saw a quick little clip of Rob there. So also joining us is Matt Sonefeldt from LinkedIn. And Matt is the head of investor education at LinkedIn. Now, I'm based in Toronto here, so we're in the Northeast, and Rob's joining us from Cleveland. So we can equally be as jealous of the fact that Matt is joining us from, I assume, sunny Palo Alto, California. And Matt, which we'll hear from in a second, is also quite prolific in terms of talking about the power of storytelling in investor relations. And I've had the opportunity to sit on a couple of panels with Matt in the past, and always a joy, and very much looking forward to hearing Matt's thought today. So Matt, if you could say hi to our viewers today, that would be great as well.
Yeah, absolutely. Thanks for having me, Darrell. This is great. It's actually supposed to be torrential downpours in California for the next couple of days. People are freaking out, so we're getting a little taste of the Midwest and the Northeast, Canada, in that matter.
Okay, that's great. Well, I'm sorry to hear that, because it's always so beautiful there, and I'm actually supposed to be out in San Francisco next week, so hopefully the weather will clear up a little bit, so I won't be.
That's a good thing. We need the water badly. So, and if you like skiing, then we'll have a ski season for the first time in about 3 years.
Oh, wonderful! That sounds great. All right, well. So thanks again for both of you for joining us today, and I know that you both have a lot of thoughts about storytelling. And so to kind of get things started, we hear a lot about storytelling across corporate communications, across PR. You see a lot of it in terms of people talking about telling stories, and you see that in a bunch of different communication in terms of people talking about how to do more than just provide the basic information. So when looking at it in IR, we're seeing this kind of coming, and as a part of some of the stuff that you guys have been doing over the last couple of years, we're seeing that have more of a place in IR. So I thought we would start today's session by hearing from each of you in terms of a kind of a high-level point of view in terms of how you see storytelling and how that's changed in IR, and really what it means, and then we'll go from there. So if we could get started, why don't we start with you, Rob?
Sure. Thanks, Darrell. I think, from my point of view, I think the importance of storytelling comes down to the fact that it's about differentiation. It's about making the connection with long-term centric investors, and providing them the context, not just the data, but providing them the context so they understand where the company is headed and how it's going to get there. And I think that through storytelling, that's really the most effective and proven way to establish why now is the right time to take a position in a given equity.
That's great. Matt, do you have anything to add to that?
Yeah, so a lot of my kind of experience in as an investor relations practitioner has been from years of investing. I worked at Capital Research, who probably a lot of people listening on here engage with all the time. That's kind of where I was born and raised professionally in doing equity research, and before that, even as a kid, was doing. I think I've read every Warren Buffett shareholder letter 3 or 4 times, and it's just kind of something I've always been interested in. And I think in both places, whether it's Warren Buffett or at Capital, one of the things we always talked about in making a great investment was owning the company. Right? We weren't just investing and we weren't buying the stock. The word stock was actually kind of anathema within the Capital culture. It was owning a company and owning it for, well, Warren Buffett says his favorite holding period is forever. And from that perspective, you want companies to be focused on what their purpose is, on what they're executing towards, their mission and vision, the long-term outcomes that they're trying to achieve. That is a story about people. That is a story about impacting change in the world. It might come with margin improvement over time. It might not, or massive revenue growth, or not. But all of those business outcomes come from organizations executing against their long-term goals.
Yeah.
To the extent that we, as representatives of the company, can bring that alive, whether it's context of the business and how something, where it came from and where it's going, to stories about the management team and the leaders who are doing that execution. It's just crucially important. The feedback I always have for our leaders is give more context and tell us who you are. Like, why are you at LinkedIn? Why are you passionate to be here and not somewhere else? And usually that involves a life story as a very fundamental place. And that's a central touch point, I think, for informing and educating owners the right way to own the company for several years down the road.
That's a very interesting way, a great introduction. I really like the aspect in terms of focusing on owners and versus investors. I think that's absolutely something that's very telling. When looking at how that actually translates to when you're communicating with investors or when you're speaking with them, can you give an example in terms of a certain situation where that unfolds? Like, is that something where is done through one-on-one meetings versus like an investor presentation versus something that's done on the website? Like, how is it? Can you just give an example in terms of a specific channel where that was actually where that approach was taken, or was continuously taken?
Yeah, absolutely. So it's a continuous goal for us in anything that we do when we engage with the investment community. Actually, one of the things that we try and do is replicate how we engage with the investment community with how we communicate and engage with employees inside of the company. So, how we communicate our strategy, how we communicate kind of where we're headed as a company, how we can communicate our business and operations should be almost identical between the two places. That's for one, right? We don't have to feel like we need to gloss it over in any way with the investment community. I think most importantly, so the tying theme in both of those venues, both internal and external, is everything we do is about our mission and vision first. So every time we sit down with an investor, we're like, let's start from the top, and the top is what we're trying to execute toward in the long term as a company. It's the mission and vision of LinkedIn, to connect the world with professionals, to make them more productive and successful, ultimately to create opportunities for everybody. If you think about how we build our product and ultimately how we build our businesses as well, they're informed and derive value from those basic mission and vision value propositions. Those don't live to serve the business lives to serve them. And that's something we emphasize time and again with the investment community, so they know where we're headed, right? So they feel like they're owning and rowing in the same direction as our employees do, as our management team does. That's what we here at LinkedIn are all executing towards. it might come in individual stories about individuals and how we impact members' lives. It might come through how we build the business. But it all always explicitly ties back to mission and vision. One of the things we did, we don't have Jeff, our CEO, speak that much in kind of very public forums with investors, but we have him do a couple of conferences every year, and more here internally at LinkedIn. But in the conferences, the one that we did last year, one of the big technology conferences, he presented our vision for the economic graph, right? And so I don't think he talked about revenue once. I don't think he talked about profitability once. We talked about kind of how we're operationalizing our vision as a company. So if you're interested, we can always talk about that later. But that was the crux of what Jeff talked about. And what we had more positive feedback from investors about that presentation. We had more people come back and say, God, I wish companies would all just kind of tell us what they're really about. Now, there's always lines, and for some companies, you don't want to be selling people a bill of goods that you're not going to deliver on. But for us, it's very real, and I think that makes it kind of relevant and refreshing for certainly investors and the investment community to hear.
It's very interesting. That kind of reminds me of a post a white paper that you created, Rob, that focused on 3 C's. And so I was wondering if you can take us through that, because my impression of that was that it brought kind of a balance to that there is the other side. Like Matt's kind of gone through something which is very, very much on the storytelling side. I mean, even as you mentioned there, having investor meetings where you don't go over financial aspects. So maybe, Rob, if you could take us through on the other side of the 3 C's, which I think is is kind of incorporating kind of a balanced approach to storytelling and other aspects.
Yeah, sure. I think about the 3 C's more as a mindset within investor relations. So obviously it starts first and foremost with compliance, and you want to be sure that you're behaving and communicating within the letter of the law, within the spirit of the law. The second C, I think, is exactly what Matt was saying in terms of context, that storytelling and the effectiveness of the story is really starting with the why, is starting with that mission vision. Why are we doing this? Why do we come to this office? Why are we investing our intellectual capital, our emotional capital on this business pursuit, and where are we trying to go? What are we trying to accomplish? And how are we going to do that? So you have the compliance, the facts, the figures. You have the second C of context, which is the putting the story and the narrative around the numbers. And then the third C is channels, and it's you've now developed a thoughtful approach to reporting your figures. You've now put together a compelling and authentic narrative around your results. How are you going to get that story out to the marketplace? And it can't be, it's not a one-size-fits-all, and it shouldn't necessarily be just one particular channel. So what are the channels to access the investors you're looking to reach?
Very good. When looking at, there was a study that came out about 2 years ago or so from Revell Research that looked at the value of IR. And if I remember correctly, it was good IR, as deemed in this research, was given a 10% premium. And on the other side, bad IR was given a 15% discount. So a 25% range there in terms of the impact on value that that good investor relations can have. Do you guys feel that what we're talking about here is really elevating that from and it sounds like, I mean, I'm kind of leading the witness here in both cases, that the answer seems to be yes. That, Matt, maybe we'll kick it back to you, that you said that there was some of the feedback that you've had on presentations that were not financial in nature at all with investors ended up having a great response. Do you think that is actually translating into like more accurate valuation in the market?
Yeah. Well, if I look at our valuation relative to our growth rate of peer sets and competitors, we're we're dead on right now. That's not always the case in the world of social media. It can fluctuate quite a bit. I think one of the ways we think about it is we're trying to limit volatility, and this is where not just the storytelling piece, but the alignment of the goals of our kind of institutional owners with that of our employees becomes very important, right? Our employees have a big portion of their compensation, kind of year in and year out, in the form of stock. Taken all together, they're our largest shareholder. You know, if you add up all of the diluted shares that are out there. And so, you know, their interests are very much the same. And so I think the approach, one of the outcomes that's impossible to measure, that we kind of strive for, idyllically anyways, is can we limit volatility in our actual shares by consolidating ownership of the company in the hands of people who want to own for the long term. We kind of break down our shareholder base with we have a get it index. So it's like a little check. Do they get it? Do they not get it? And if they don't get it, you know, we'll try and, you know, educate them so they get it. And, you know, we do this kind of with our sell side analysts too. And it's not so much do they want to buy more or buy more stock. In fact, we try and be very objective and have people at least understand the company from an analyst perspective. So if they sell for at least informed reasons, or if they have a sell recommendation on whatever it might be. We want it to be very balanced. But for those who do have decided to own, we want to make sure they get it. They don't have unfair expectations of the company. They're not owning for the wrong reasons. And that's something that we spend just a lot of time trying to build alignment and do a lot of engagement around. So hopefully that comes in the form of lower volatility that manage, and all of that's about getting the story, right? Lower volatility means people are kind of aligned with their understanding of the company. So there's an efficient market understanding of kind of who a company is and what they're executing towards. You know, from that standpoint, hopefully, you know, it creates less volatility in the shares as well, which is good for our owners on both the public and the employee side.
That's very interesting. That, you know, that's something that we've talked a lot about in terms of the effective use of social media, and it's as a communication channel, its ability to help smooth volatility post earnings. So it's very interesting that this discussion around the value of storytelling being something which actually can translate specifically into value. Now, it's an intangible as well. Like, as you said, you can't draw a line and say, well, we told a great story today and there's a bump. But I think that's something that's really interesting, because I know in some of the discussions that I've had with more, we'll call them financially driven people, financially focused individuals in the market, whether it's on the IR side or on the buy side. And the interesting thing is that I think some of them, if you talk about storytelling, their initial response is they kind of look at it, go like, that sounds pretty soft. Like, that's kind of a pretty fluffy thing. Sounds nice. Tell me a good story. But really, it's about results. And what the connection, which I feel is very, which is a great connection that's being made, is around, it's the long-term view. So if you're looking at someone that's purely quarter-to-quarter driven, an investor that's quarter-to-quarter driven, they're not going to have that check mark. And I love the get it index.
Yeah.
I can just see that in a targeting application, an investor targeting application. Just like, okay, let's target everyone in Boston that gets it. Is a great application. But maybe, Rob, on that point, in terms of the combining this balance of the financial aspects, certainly, you know, IR is there to report results and the financials, but looking at it in terms of, like, in your work, when you're dealing with folks, let's say, that are not fully supportive of storytelling, you know, and they come in and they come with that view of IR as a compliance function. How do you talk to them about that in terms of really illustrating to them that this is there's much more to it in terms of value here?
Well, that's an interesting question, because you're right. There is a healthy percentage of folks where their primary mission is, I want to make sure that we're compliant. I want to make sure you know, they see IR as maybe a morphing of financial reporting. And what we talk to them about in a lot of ways, and it's similar to what Matt was saying, is we think about IR, better said, we believe there's a PE ratio for investor relations. Just as there's a PE ratio in the finance world, there's a PE ratio within the IR world, and that's performance to expectations. And the more you can narrow the gap between performance and expectations, you should see a smoothing out of the volatility. You should see value being unlocked, whether it's for tangible or intangible assets. You should see that value appreciation that comes from effective IR. And when you look at, how do they define what's effective IR in that study, it typically ties right back to storytelling. It's about strategy. It's about innovation. It's about differentiation. It's about market position. It's about growth. It's about management team. It's about culture. So, you can get tied up on a particular data point, and there's going to be investors that's all that's going to matter to them. And that's why it's important that you have a healthy compliance piece. But we shouldn't necessarily look to ignore or overlook those investors that are looking for the context, that are looking for the why, that are, in a sense, what I would say to them is, let's not encourage short-term behavior by the absence of a longer-term vision and story and narrative for the company.
And so do you think that for those in IR that are not incorporating storytelling, this may come off a little harsh, I'm not sure how else to say it, but are they really doing a disservice to their company because they're not providing that long view? That if they're not really, if you're in IR and you're not incorporating everything we've talked about, and I think storytelling in itself is that if there was a harder, more financial term about
right.
perhaps storytelling disclosure tied to a 13 BGD filing,
right.
perhaps that would make it more of a recognized component of the discipline. But it seems to me that if you're in IR and you're not using these types of strategies to provide that long-term view, to provide that context, you're really doing a disservice to your company because you're not really getting, your investors don't really understand and aren't really giving you that value that should be ascribed to the company. That may be a bit of a leap, but I mean, I'm
no, man, I don't know if you want to take that one first, or you want me to buy you some time.
No, I mean, I can take a shot. So again, a lot of my experience goes back into, or a lot of how we kind of do the IR role at LinkedIn kind of harkens back to my experience as an investor at Capital. And at Capital, we would do all of our homework on companies, but it wasn't until we spent time with the management teams, and that could be the CEO, the CFO, it could be line leaders of businesses. We tried to go to the companies and understand, who they are and what they did. And you could never build conviction with portfolio counselors until they'd had a chance to kind of touch and feel the company and understand what it was all about. Because at the end of the day, they're putting hundreds of millions, if not billions of dollars of capital to work in this institution. And so you can't do that without storytelling. Now, I think we're in a world these days too where so much of the volume in the market is dictated by shorter-term trading, and to the extent that you don't have any solidity in your shareholder base, then that could, I suspect, and this is more postulation, although I've seen about a bunch of volatility work on this, that if you don't have a stable shareholder base, that can really whip around fast, right? It's because there's no anchor point for your ownership, right? Like, so yesterday I think we were down 3%, and then I saw a couple of the people I would have expected to see start buying shares at a certain point. And that's not what I'm trying to manage for day in and day out, but it's an output of what I think of a wide base of people knowing the story very well. For those who have conviction and want to own, feeling very comfortable owning at levels when there is the volatility out there. If you don't have that, then the whole thing can just whip around like a little ship in a storm. I suspect, and I think you see that a lot with a lot of companies that haven't invested on this. I think in this aspect, and it extends to the channel point. It extends so far beyond. It's a philosophical approach from the management team. IR is one piece of that. I work very closely with the comms team, and the comms team is engaging kind of globally in a very proactive way, in a very similar storytelling function to what we do. And it's all aspects of the company. It's not just kind of, what the company is. It's not just what the company is doing. It's not just PR. It's business marketing. It's talking about the virtues of our engineering culture, and that helps with talent acquisition. So all of this stuff kind of is a philosophical approach to the entire company. I also think it would be hard as an IR team to be very into storytelling when your management team is not, although I suspect there's an opportunity there to kind of shift that tide your way.
Absolutely. We've talked a lot about the impact of this type of approach to volatility and to the value of IR, but I'm wondering if in your mind, is there anything that is, in terms of metrics and measurement, so if you start to, let's say you have an IR team that starts to, or a company that starts to embark on these types of tactics, what type of metrics can they be looking at in terms of knowing, is this working? I mean, one is the market, but anything internally, like is it something about, well, I won't lead the witness again, it just like thinking, how do you measure whether or not this is all working well or not?
Actually, Rob, I'm curious to hear what you have to say, since you advise a wide swath of companies, and it's kind of how you advise them, or systems they've devised over time to kind of measure effectiveness on this front.
Sure. Thanks, Matt. It's a combination of things. Part of it is how do you quantify it? So you're looking at whether it's a particular shift in the shareholder base, if you're looking to perhaps see if you want to see a move towards more of a retail component to underpin your institutional base, or if you're looking to get more credit with growth and GARP investors versus a value, or see perhaps it's a bit of a decrease in the consolidation of how your stock is held. So if you have a top 3 and you really would like to have more of a top 8, those types of metrics are important. From a qualitative standpoint, I think it goes to either feedback that you're getting anecdotally, or an actual snapshot through a perception study. I think you can see it in terms of the quality of questions that you're getting, the types of inquiries that you're getting, the number of what you would determine as a quality conversion of investors that you're targeting that become owners of the company. So a lot of it goes first to what the company's trying to achieve from a business and communication standpoint, and then looking at those quantitative and qualitative measures that align with it.
Yeah, that makes sense. I mean, I know for us, like I said, we track our top 25 shareholder base very closely. And again, I'm not too concerned if people are buying or selling, but look at the composition, kind of look at the turnover, look at the concentration of it, and that's something that we've prided ourselves on over time, has been that our top 10 owners have owned, top 10 institutional owners have consistently owned over 40% of the company's shares. Our top 25 has been much closer to, in excess of 60%, and that hasn't moved. and then we've kind of incorporated this more qualitative get it index over time.
Right.
And then yeah, I think what you said too, Rob, makes sense, right? You can kind of feel it in the conversations too, right? You know by being out there in the field talking with investors when people get it or they don't. You know, and that's just something. I think that there's a lot of, for me, that's been a very actual powerful component of how we've done things here, is being actually empowered as an IR practitioner too, right? Like, I suspect the storytelling aspect goes hand in hand with having a team that's empowered to tell that story versus, you know, I've come across lots of different companies, both as an investor and kind of in conversation here now in this role, where people just feel beaten down, people don't feel like they have a lot of ownership over the narrative of the company. Like, one of the great things that we have is we help shape that narrative. We kind of work with our business leaders every quarter to help shape the stories of their business. We help shape the narrative of the company with Jeff, the CEO, you know, and what he publicly says out there every day. And so we're as much a part of that storytelling process of the entire company. We're not just an output in the system. And that I think has been very important for institutional investors getting it and being interested too every time. And so certainly not something I want us to kind of strive for, but again, it's been an output. We've converted investors on our own without them ever having to meet the management team, because I feel like we have a good grasp of the business and understand the story of the company.
And that's something that I find quite interesting. That I'm wondering that is how much of the ability for the IR function inside of a company is really based on essentially, like, what I would classify everything you just talked about is really around culture. And you being empowered as a group is really part of the overall culture of LinkedIn that has kind of set that up. But in those companies where, let's say, the management is not as focused on storytelling, perhaps they're more quarterly results-driven, any thoughts in terms of what the IROs in those companies, what they could do in order to start to embrace storytelling components without trying to, you know, fundamentally change? Obviously, we all know changing the culture, the DNA of a company is quite difficult, especially for you know, any one person. So yeah, so any sort of tactical things that we could share that could be helpful for them, for those individuals that are in that kind of situation, Matt or Rob?
Yeah, well, I'll take a first crack at it. I'll be more brief than I usually am. I think I suspect that those companies tend to be more kind of results driven themselves and quarter to quarter. Actually, Michael Dell just wrote a nice piece both in the Wall Street Journal and then posted on LinkedIn as well this morning about going private, but being able to now have the freedom to execute more on long-term goals. I suspect, but long-term shareholders always say that they're, you know, focused on the 3 to 4 year outlook for the company, right? And so, you know, I think one easy thing you can do is to say, hey, people who want to own the company for the long term and not just want us to kind of focus on the quarter-to-quarter grind, like, they want to know our long-term strategy. They want to know our long-term purpose as a company. Like, we need to tell a story around that and have conviction in it ourselves in order to really, you know, attract those types of investors, or else we're just lying to ourselves. And so I think that's actually a really important piece of feedback that this function can give to a management team, because management's always going to listen to shareholders, because on a bad day you don't want them to call you and, you know, harangue you basically, or, you know, have activist shareholders come in or whatever it might be. A lot of that, I think, goes back to, you know, a management team thinking about executing longer term and being able to articulate that. And plenty of companies don't think about it that way, but I think that's an important piece of feedback that this role can provide to the management team, because we uniquely talk to people who own the company.
Mm-hmm. Rob, any additional thoughts on that?
Yeah, a couple of things. You know, I think the IRO is in a unique position in and of the fact that I don't think I've met a CEO or CFO that thinks that their stock price is fairly valued. Most would say that they are drastically undervalued. And so I found it very easy to engage a CEO or a CFO that is results-driven, results-oriented, with the simple question of, so what do you think what doesn't the street understand that's holding your value down? And inevitably, it will lead to a discussion about an aspect of the company's story that isn't being told properly, and that then opens up the opportunity to say, well, let's tell that story.
Very good. Very good. I wanted to shift gears just a little bit. I mean, it's certainly relevant to it, but Matt, you mentioned activist investors. And certainly activism is something that is certainly growing in size. We're seeing many more companies being affected by the activist agenda. And I'm wondering the value that storytelling can bring in that context. I mean, it seems clear that focusing on your shareholder base and focusing on long-term owners certainly adds stability to your shareholder base. It also reduces volatility. I'm wondering if this approach also does help insulate. So assuming that the other aspects of the business are not prime for activism, such as corporate governance issues or perhaps a balance sheet issue like too much cash or the myriad of things that they go after. But I'm wondering if two companies are kind of treated or looked at equally from a how open they are to activism. One that's telling a better story is the thinking that they're better insulated from those activists than one that isn't.
I don't know the answers to the question, because one of the highest quality of companies, drew pretty significant activist shareholder in our neck of the woods, which was with Apple over the last couple of years. I think probably as of late that has tampered down some, but no company is immune, I think, to drawing the ire, especially if you have a lot of cash on your balance sheet. I don't know, but my gut would say that companies that deploy storytelling well and consistently, which I think is probably a very important aspect of this, right? Like I think you could do storytelling, but tell stories in such a way where it's inconsistent over time and helps you lose credibility very effectively. I think if you're part of being an effective storyteller is being consistent, and I think for me, when I hear storytelling, another way of saying that word is alignment. Is that you're building alignment around the company philosophically. Sometimes activists are going to come in no matter what. Like, don't. This conversation should not be taken out of context. Suggest that storytelling is more important than results. At the end of the day, public company shares are going to reflect in a larger degree the results around them. And I think your good IR 25% swing was easily within the standard deviation, or a couple standard deviations, right? So the impact here of storytelling is more on the margin relative to the results of the company. At the same time, I think the more a company is aligned, the better it probably executes. Probably make for a good academic survey. And so the company that executes poorly probably has less alignment on their long-term purpose and how they're achieving against that long-term purpose and executing against that. So, I suspect, as with other things like having women on the board and having women in management, as one example, that good storytelling and consistent storytelling is probably a measure of quality. That's a little, that is something that you would want to look for, and I bet you're generally will find in companies that activists become enamored with inconsistent storytelling, or maybe it not having been done particularly well. But that's merely postulation on my part.
Right. Very insightful. Rob, do you have any thoughts to add on that?
Well, one, I'm impressed that Matt used one of the SAT words that I skipped. But that beside the point.
What's that? Which word was that?
Listen, I don't want to. I've said too much already. My academic prowess.
Prowess is an SAT word. It must be.
Yeah, there you go. At least a ACT. I think that at the core, I agree. I don't necessarily think that that storytelling in and of itself is would immunize a company from an attack. What I would say is that effective storytelling creates a little more of an incline if somebody wants to make a run at you. And if you are doing a good job of defining yourself, establishing your investment brand, and what the company is, where it's going, managing that PE ratio, it makes it a little steeper climb for somebody to come after you. And I think it's also important to note that the activists, by and large, are highly sophisticated storytellers in and of themselves, and highly sophisticated communicators using all the channels that are available to them. And so my thesis or my recommendation typically would be that a good offense is sometimes the best defense.
Very well said. Very well said. Well, I think I'm just looking at the time now. We're kind of over 40 minutes, so we've kind of taken up the time that we wanted to allot. The video is going to be available on the Q4 Web Systems YouTube channel, and so I wanted to thank Rob and Matt for some very insightful conversation. Always a pleasure to chat with you guys, and certainly looking forward to next time. But thanks very much for your time.
Thank you, Darrell. Good seeing you, Matt.
Both of you as well. Thank you guys so much for the opportunity.
Thank you. Happy holidays.
Bye-bye.